Hi, how are you today? So today we are going to uh, go to another topic of auditing. Okay, previously in the previous presentation we have covered audit risks, audit materiality, and also audit sampling. Okay, and now we go to another part of the important audit in audit, which is we as an auditor must be able to collect or get appropriate evidence so that it really helps improve our audit quality that could actually help us in making an audit opinion. So today we are going to look at audit evidence, audit procedure, and audit documentation. So when you look at our learning objective for this particular session, so here you must, after the end of this course, you will be able to explain different type of audit evidence and how do auditors gather this evidence. Okay, basically this evidence is gathered through the audit procedure, and then must be able to explain the reliability and also the relevance of audit evidence. Okay, see how relevant and how reliable are the audit evidence. And later on you must be able to explain the relationship between audit risks and also audit evidence. And lastly, you must be able to identify types of audit documentation and how does the auditor manage it. So there are three things that you need to consider here to know: area related to the audit evidence, audit procedures, and also the audit documentations. Okay, now let us look at audit evidence. Okay, what is audit evidence? Okay, as I said just now, audit evidence are all the material that you collect in the process of auditing as a source of documents, as a source of proof, okay, to support your audit opinion. That is what is meant by audit evidence. Okay, now SIA require that auditors to obtain sufficient appropriate audit evidence. So this is the keyword. It must be sufficient and appropriate. Okay, why is this important for the auditor? It is to be for us to enable them to draw a reasonable conclusion, okay, of a audit opinion. So what are the audit evidence? They are all information used by the auditor to determine whether the informations being audited is prepared according to the established criteria. Here, what is the established criteria? Is the MFRS here in Malaysia, the financial reporting standards. Okay, again, for this part, you need to know what are the audit evidence, why is important to gather and appropriate and sufficient evidence. Okay, now how does this management assertions, audit objective, and audit procedure and audit evidence related? Is always related. Why? Because you need to know what type of management assertions that you are going to check, and then from there, then what is the objective for you to attain, okay, in answering or in ascertaining the management assertions, and then how are you going to conduct your audit, okay, to achieve your audit objective, and from the audit procedure, you need to know what are the audit evidence need to be collected. Okay, here in this explanation, in obtaining the audit evidence to support the assertions, right, contained in financial statement, the auditor develop a audit objective that relate to the management assertions to obtain audit evidence through the audit procedure. Okay, here if you can, I can wrap up in this the relationship between management assertions, audit objective, audit procedure, and audit evidence is, okay, management assertions. What are the management assertions that you are going to check? For example, completeness of record of sales, for example. So the management assert that all sales are completely recorded. Then you need to identify what is the audit objective or objectives. So the audit objective is to check whether the sales are completely recorded or not. Okay, that is audit objective. Then from that audit objective, you need to identify what are the audit procedure. How you're going to perform your audit to check whether the sales are completely recorded or not. Okay, from there, then you gather the sufficient, okay, related to the sampling just now, and appropriate evidence. Okay, the type of evidence that you collect. That is actually how these things are related. So now let us see what are the source of evidence. Okay, there are several sources of evidence. One is the source of evidence is where the evidence is gathered by the auditors themselves. Okay, it is what we call the auditor originated evidence, where the auditor seeks the evidence themselves. Okay, some evidence also you can gather from third parties, or some evidence also you get from the staff or management of the client. So here there are three evidence that you can gather from. One is the one that the auditor originated from the auditor through the process of auditing, and the other one is the you get from the third parties, not from the organization, and the other one also from the management and staff of the organization. So that those are all source of the audit evidence. Okay, how does this evidence is being accumulated? How do you collect the evidence? Okay, so when before we collect the evidence, okay, through that process that we explained earlier just now, we need to consider all these things. Okay, we need to consider number one, the audit procedure. Okay, right. Okay, we need to identify what the audit procedure, then we can identify the audit evidence. For example, if the audit procedure is observation of the fixed asset, so what is the audit evidence? It's not the document. The audit evidence is your proof of the observation. Maybe you can use photograph and everything, so things that you to support your observation. And then sample size to be taken. It's very important that when you collect your evidence for it to be sufficient. Okay, how sufficient it is, they depend on the sample size. Okay, so you make sure that your evidence is sufficient. Okay, which item to be collected? This is very important, that you make sure that you select the correct evidence. Okay, why is this so? Because you don't want to collect evidence that is not relevant, and you don't want to collect evidence that is not reliable. For example, like original documents is more reliable as compared to photocopied documents. Okay, these are the things that you need to consider, and also the timing. Okay, when you to perform the procedure, the date and audit report submission. So it's very important that you collect your evidence at an appropriate time. So you cannot make decision or collect your evidence when the evidence is no longer relevant, or it is not that relevant for that particular time of audit, or they is not relevant for that particular accounting period. So this is very important when you set or you decide what evidence or how evidence is being collected. Okay, now there are several type of evidence. Okay, here there are several type of evidence. Number one are the evidence collected from process of physical examinations. Right? So when you conduct an audit through physical examination, which you check, you observe and everything, so these are the evidence that you can collect from them. Also, sometimes the evidence is collected through confirmation. When you ask that party to confirm certain figure or certain values, so these are the type of evidence collected from confirmation. Or sometimes, yeah, there are evidence you collect through documentations. So you need to get the documents, you need to photocopy the documents, and also evidence you collect from the result of the analytical procedure. When you do analytical procedure, when you do trend analysis, I think we have discussed this before. Trend analysis, social analysis. So the evidence is from that particular analysis. So sometimes you might do some inquiry of the clients. So your evidence, your report from your inquiries or questionnaire from the clients can be used as a audit evidence. And sometimes you have to do reperformance, what we call a walkthrough test. You go, you place a dummy documents, everything, and you check whether there is actually in test of control, we can see whether they comply or not. So this particular result from reperformance can be used in audit evidence. So sometimes we do some recalculation, we recalculate again the process so that the output from your recalculation can be used as a other evidence, whether it is tally to the one exerted by the management, the one that actually declared by management, so whether it's the same or not. Again, observation, you can always observe, you can always see, you can always look at how things that's being done, and you can use your report of your observation as a audit evidence. Okay, let us see what other physical examination. As I said just now, physical examination is a process of inspection or count by the auditors. Okay, it provides a reliable type of evidence that involve auditor inspecting their themselves, inspect and counting of tangible asset, for example. So for example, like if the auditor himself counting the cash in hand, so that particular physical examination can be use an evidence. Also, the auditor himself do some examination of the inventory, they can also be used as a audit evidence. Okay, now however, provide little or no assurance to ownership objective. That is for auditors and not for the ownership. The next is the confirmation. Confirmation is a receipt of a written or oral response from independent third party. Here the auditor will ask a third party, for example, if they want to confirm the value of the account receivable of a particular we call debtors, or maybe there the auditor will have to contact the debtors and they will ask to reconfirm the amount owned by the debtors. Okay, now this can be done through the letters and so on. So there are two types of confirmation. One is what we call a positive confirmation, and the other one is a negative confirmation. Okay, here for positive confirmation, the response is whether agree or not the amount is asked by the auditor. Stated, for example, okay, Mr. A, you are the debtors of particular company. Okay, you have amount outstanding about 10,000, so you agree with this. So this require a confirmation from the third party. So they need to come up with some confirmation form and everything, so to be given to the auditors. However, there is another confirmation called a negative confirmation. Okay, now this is negative confirmation is where the queries made to the client. Okay, where the client only reply or respond to the query if the amount is incorrect. So if there is no response from the client, from the third party, it's assumed that the amount is correct. So there are two types of confirmation. We have positive and also a negative confirmation. Positive is where the third party need to reconfirm or respond to the query. Whereas negative confirmation, the client will not necessary to respond. However, the result of not responding the confirmation, it reflects that the information is correct. All right. So now documentations, evidence from documentation. So here, this is done through the inspection of documentary evidence. Okay, what do the auditor check? They check the ledgers, journals, payment vouchers, and invoices. So these are all the documentation. So here, these are all the internal documents generated and maintained by the client. Okay, so here, what the auditor does, they collect all these documents. Okay, whether they check the ledgers, they check the invoices, copies of invoices, and also maybe a few external documents they get from the third party, which is from bank statement and supply invoice. So these documentations they gather through from the process of auditing can be used as an evidence. Okay, now the analytical procedure. As I said just now, evidence from analytical procedure are the result of your analysis. Okay, what analytical procedure that you have done? Okay, for example, in the risk assessment, you have done trend analysis or financial ratio analysis. So then the result of that analysis can be used as audit evidence as well. Alright, so it consists of evaluation of financial information made by a study of comparison. So maybe trend analysis and relationship, maybe some ratio analysis and both financial and non-financial data. For example, like, okay, you have look at the company background, the directors, in directors report, they said that they secure certain project, for example, but however, that statement actually not being materialized in the number of sales. So you can actually check whether there is some discrepancy or the mismatch between what is being reported in the director statement and the financial report. So these are the analysis of the procedure that you can do. Okay, maybe we through ratio analysis, you look at the inventory turnover. So previously, the inventory turnover is, for example, 2 times for last year, and the sales is 1 million. So here since when you conduct the inventory turnover analysis for this year is 4 times, and you expect your sale will be double. However, now the sale is not double. Maybe it's triple or quadruple. So it's something not normal. So maybe you can see that the particular part as a audit evidence that you want to prove. All right. So now inquiries. Okay, you can gather evidence in the process of inquiries. It can be done orally or through written inquiries. Okay, where do you get it from? You obtain from the client, personnel, or management. Okay, how they do? Okay, example here, the auditor may ask the chief accountant to explain the discrepancy of the amount of cash recorded. So this is through explanation. Okay, you can inquiry. Okay, why is this not telling? Okay, and then this is normally is necessary to obtain supporting evidence to substantiate respond. Okay, why? Because inquiries alone should you cannot use that evidence as a supportive evidence, but it must be supported with some other evidence as well. Okay, reperformance. Okay, reperformance is when you redo something again, right? It basically we do some rechecking sample or computation of transfers, or maybe you can do some checking of arithmetical accuracy. Maybe it's like the process of reperformance you can do is maybe you can do casting, casting, cross casting, okay, checking whether it's tally or not, reconciliation of ledgers and account balances, okay. Then you can do it, you can do reperformance, and then you can see that this type of evidence is considered as highly reliable evidence where you do reperformance or recalculations. Recalculation is a computation and mathematical recheck. So casting, recheck, recounting are all done through the recalculation. This is normally done by recalculating the figures worked out by the client for the purpose of assessing if there any difference between audit work and also client work. So you may make comparison between your calculation and your client's calculation. So you can do some recalculation to results as audit evidence. So and times evidence can also be gathered through observation, where you just look at what is being done. Okay, so for example, like observing the performance of some activity. So what you do is look where to observe whether such a segregation of duties happen in the process. So here observation is very highly reliable because it's the auditor actually get the first-hand information of what actually happens. So this is very important. Okay. Now, quality of audit evidence and adequacy of audit evidence. Okay, you must make sure that your evidence is at a very high quality. To attain a very high quality audit evidence, it must be appropriate and also sufficient. Okay, that is to make sure that evidence is persuasive. Okay, persuasive means they can influence. They can be used can be used to support your audit opinion. So for the evidence to be persuasive, it must be appropriate and sufficient. Appropriate, it is appropriate. You can look at whether it is reliable, relevant, okay, and then it is appropriate if it is provided by independent provider, okay, and then also if we talk about sufficiency, you talk about whether it is enough or not. So you need to consider this criteria to make sure that your evidence is persuasive evidence. Okay, what is reliable? Okay, one of the determinants of the persuasive audit evidence is the evidence must be reliable. Okay, it's basically the credibility of the evidence and influenced by its nature of source. Okay, level of reliability can set into high, medium, and low. What is high? The auditor has a direct knowledge about it. Okay, for example, like recalculation, reperforming, everything. Medium depends on whether the auditor external or internal sources. Okay, normally external sources is more reliable than internal sources. Alright, low when there needs more substantiation by the auditor. The evidence is considered as low. Is not reliable if the auditor needs more checking, more confirmation to verify. Okay, for example, the veracity of that information is being questioned, so the auditor need to verify that evidence. Okay, so that is considered as a low level of reliability. Okay, now the next thing is relevancy. Okay, the auditors must be relevant. Okay, here we have to check whether the evidence relate to specific objective. Okay, make sure it is relevant so that we can use that evidence to meet our specific audit objective. For example, to check the completeness objective for recording sales, okay, the evidence is a numerical sequence of pre-numbered shipping documents. That is more relevant document. So you have to check the sequence of pre-numbered. So meaning that everything in the sequence must be recorded in the financial statements, right? So timeliness, okay, refer either when it was accumulated or period covered by the audit. So make sure that the evidence is actually evidence gathered in that particular accounting period that you are going to audit. For balance sheet items, it is more persuasive if close to the date of balance sheet. So for example, you want to check the cash balance, you check the cash balance. That is the most relevant evidence to check the cash balance is towards the end of the balance sheet. This is the time that you need to consider. Okay, for profit or loss account, more persuasive if there is a sample from entire period under the audit, not towards the end, not at the beginning. So the entire period. So here we took a look at the timeliness. Then sufficiency, right? Sufficiency. So evidence must be sufficient enough. So if we set our materiality at a low level, so make sure you have a very sufficient evidence. So your evidence must be sufficient that cover your low level of materiality level that you have set. Okay, it measures the quantity of the audit evidence. We talk about sufficiency, we talk about quantity. Therefore, we need to consider certain area. Okay, for example, like if you look at the internal control, if the internal control is weak and you say that your control risk is high, therefore you need to gather more evidence. Okay, again, this is why internal control. Then the nature, audit risk and materiality, low level of materiality require higher number of evidence. High audit risks require for you to reduce audit risks, you require to gather more audit evidence. Okay, and quality of evidence. If the evidence is gathered from the low quality of sources, so you need to require more audit evidence. And also auditors experience and knowledge about industry, about the business industry. If the auditor have a limited knowledge about the industry or the business, so maybe they require more evidence to support. Okay, now here is what we gather from the Aaron's 16th edition. All right, how does this audit evidence decisions and persuasiveness related? Okay, now we have to look at if anything related to the audit procedure and timing, you need to look at all these things. Okay, whether it is relevant, reliable, and also timeliness. However, if we relate something to do with your sample size, so it's always referred to sufficiency. Okay, how adequate is the sample size and selection of proper population item. So it's very important you select the correct evidence. All right. Okay, now let us look at audit procedure. Okay, just now we have seen, we have get information, or we have some knowledge about what is audit evidence and what is the good quality of audit evidence. And then now we look at the audit procedure. Audit procedure is a process of gathering the audit evidence, right? This is the process of checking. So audit procedure is to collect the evidence, as I said just now. Audit procedure is a process to collect the evidence. Okay, so here the proper definition of audit procedure is the specific act performed by the auditor to gather evidence. Okay, but it's always determined by a audit objective. Okay, to make sure that audit objective are met. There are several to collect that types for 8 types of audit evidence just now: physical examination and so on. Okay, and all other observations. Okay, now here are the type of audit procedures. Okay, so maybe if you want to get evidence through documentation, you have to do some examination. Maybe if you want get the information through analytical process, you need to do some scanning. Documentation, you have to read the document. Okay, analytical procedure, you need to compute. Reperformance, you need to recompute as well. Okay, reperformance, you do some footing, checking. Reperformance evaluation, you do some tracing. Documentation, you can do some comparison. Physical documentation, you count. Observation, you observe. Okay, inquiries of client, you do some inquiry. And then documentation, you can do some watching. So these are all the type of the audit procedure you can do to achieve, to get this particular audit evidence. So it's very important that you select the right, or you use the right audit procedure for you to gather the right audit evidence. Otherwise, it will not make sense. So your audit quality will be affected. Okay. There are several types of financial tests in audit. Okay, you can do the audit procedure through what we have discussed just now, through examine, scan, and until watching. Okay, how you can, but there are several types of financial audit you can do. One is test of control. Test of control is actually the test of the level of the internal control. Substantive test of transaction, where you are going to have perform a substantive procedure to detect error or fraud in individual transactions. For example, like sales, purchases, and so on, whether the transactions related audit objective has been satisfied. So then the other one, the other financial statement audit is a test we can do analytical procedure. As I said just now, it can be done to comparison or the analysis. And also test of the account balance. This test is concentrate on the detail of amount contained in the account balance. This is normally we do it for the item in the statement of financial position. So whether the balances are being satisfied. Okay, right, fixed asset and everything. So now here there are, when we want to look at the reliability of evidence from the audit procedure, it can be summarized like this. Okay, for example, like, okay, if you want to set high level of reliability, higher level, so it can be done through the physical examination and observation. Medium level, through documentation, inspection, confirmation, and analytical procedure. Low level, maybe inquiry from client, personnel, and or management. So here is a type or level of reliability and type of procedure that you can use to gather the evidence. Alright, so next, the last part of our session today is the audit documentation. So when we conduct the audit, we need to make sure we keep the records. How do we keep the record? Is we keep the proper documentation of audit documents. So how do you do that? So here in audit documentation, we call it audit working papers. This is a principal record of auditing procedure, applied, evidence obtained, and conclusion reached by the auditor. So any information related to the audit procedure, evidence obtained, okay, it must be recorded. Okay, because all these working papers need to be recorded and kept by the auditor. So according to ISA, according standard of international standard of auditing, working papers should record the auditor's planning. So auditor's planning must be there. The nature of audit, they need to narrate, to tell what is the nature of the audit, and also the timing when the audit is conducted, and the extent of the audit procedure being performed at the end, and also the conclusion drawn from the audit evidence obtained. So these are all the working papers that need to be kept, then to be maintained by the auditors. Okay, why is it important to have a working papers? It helps to aid the auditor in providing assurance, okay, that they have conducted an adequate audit procedure. Next is it provide a basis of planning of the audit. So working paper helps you to as a basis of planning, and then it is used as a record of evidence accumulated, and then of course if it can be used as a data to determine the type of audit report that you are going to perform. And then also sometimes, okay, the audit report can be also used as a supervisor or partners of auditors to review the work of the auditors. And then what important is, okay, if you are going to re-audit the company in future, you can use this working paper as the reference for future audits. Right? These are the importance of working papers. So it's very important for the auditors to keep all the working papers, and it also can be used as a proof. Is there any legal dispute about the audit work? Alright, so type of audit documents on working paper, there are two types. One is what we call a permanent file and current file. Okay, what are things that contain in the permanent file? Basically, they contain an historical data or continuing nature. Something that is historical and not changed and will be the same to other certain period, so it will be kept in a permanent file. So whereas what is a current file is all include all the audit documentation applicable in the year of audit. So this is actually maintained for the current year audit, but this one is actually maintained for every audit, where because they contain historical data. Okay, what are things in the permanent file? For example, there are something permanent, for example, like memorandum of articles. Okay, the information about what is the company doing and so on. But then organization chart will not change every year. Okay, check of the account, organization charts, accounting manuals, and so on. These are all the permanent or historical documents. Alright, it is in the permanent file. Whereas in the current file is a copy of financial statement and auditor's report for the current year, and then the audit plan for the current year and audit programs for the current year. Copies of any meaning of meetings or any excerpt from the meaning of meetings for the particular year, it must be there. Working trial balance, where you work on the trial balance, it must be there also. Any adjustment or reclassification or general entry, it must be in the current file. And then these are actually working papers to support the financial statement account. Alright, example of working paper. For example, like working paper, one is audit plan, audit program, okay, trial balance, account analysis, listing, and audit memoranda and audit classification. You can always refer to your textbook, Aaron 16th edition. So if you want to know the detail, what are the example of the working papers? Okay, control and rights about the audit documentation. Who owns the audit documentation? Is owned by the auditor. Therefore, the auditor need to control the audit of the documentation. So audit documentation is prepared during the engagement, including schedule or prepared by the client for the auditors. Okay, and is the property of the auditors. Okay, is the property of the auditors. As such, the auditor need to control the documents. Okay, anyone else, including the client, has a legal right to the examine as ordered by court or legal advice. However, even though it's owned by the auditor, your client can actually examine, okay, as ordered by the court or legal evidence. Okay, now here the audit documentation or audit we call must be kept confidential by the auditors. It's required by the MIA bylaw, Part A5, and auditors should not use the client info for personal advantage to the third party. It's very important to keep confidential of the auditors of the client's information in the working papers. Okay, here is not this shall not disclose except permitted situation. Remember previously what are the permitted situation? Maybe it's required by law and everything, so it's covered by court. So that's why you are allowed to disclose that information, right? Okay, now ladies and gentlemen, fellow students, okay, we have covered this particular week on topic related to audit evidence, okay, audit procedure, and also the working paper. So it's very related. What is audit evidence? Audit evidence are the information that you gather, okay, for you to support the audit opinion. How do you get the evidence? To the audit procedure. Okay, audit procedure. Where to keep all this audit evidence and to record all the audit procedure? It must be in the audit working paper. This is the audit documentation. It's divided into two. One is permanent and the other one is current. Okay, you need to know what are the content in the permanent, what are the content in the current, and why is it important for you to keep the audit working paper. Is very important. All right, so here are the evidence. You need to know why the other evidence must be persuasive, and okay, what are the uh, criteria of the persuasive evidence. Okay, uh, so here you need to know the criteria of the persuasive evidence. Okay, one, it must be appropriate. Okay, appropriate, and the other one is sufficient. So it's very important. So that's all for today. So see you again next topic, and hope you can comprehend what we are going to cover today, and make sure that after the end of this you go back to your textbook, okay, in chapter 7. Right, so you can go back to your textbook in chapter 7 and do some further reading and gain understanding and do some exercise there. Thank you very much and see you again. Thank you.